we will now focus on pros and cons on CCCTB with, and I will have the pleasure to introduce our panel. So Delphine Siquier-Delot is a senior tax analyst at Institut Friedland. Sune Hein Bertelsen is leading senior tax policy advisor at the Confederation of Danish Industry. Alfred de Lassence is VP tax with Air Liquide. And Patrick de Cambourg is the chairman of the French Accounting Standard Agency, ANC, l'Agence nationale des normes comptables. As we have seen previously, since the failure of the first initiative back in 2011, the European Commission has tabled in October 2016, has decided to relaunch the Common Consolidated Corporate Tax Base project, but this time with a two-step approach. First, a proposal on a common base, and second, a proposal on consolidation. So this raises a series of questions that we will now address. First, is CCCTB the right approach to establish a level playing field within the EU? Can CCCTB contribute positively to European competitiveness? And we have here businesses from the EU. And how do enterprises apprehend its implementation, especially in a changing international context? So in order to leave the floor to questions, that would be for the last half hour, and we will do so in all the panels that we will come up, including for the keynote speech of the Commissioner Pierre Moscovici. We have suggested to structure our roundtable into two rounds. First, a first round on pros and cons of CCCTB, the general approach, and a second one more focused on implementation challenges. So first, a question to Delphine. You have recently published a study on CCCTB and competition in October 2017. What would be the possible scenarios that you would see for European corporate taxation?
Thank you, Anne. Yes, Institut Friedland identified 4 possible scenarios, and they will be analyzed in light of their potential impact on corporate competitiveness. They do not claim to be exhaustive. It is only possible options and open to debate and discussion, of course. So the first scenario would be tax competition as usual, like a statu quo situation in which tax competition remains like it is today, with all the effects that we know. But how would it be the impact for corporate competitiveness of such a scenario? In reality, companies need more visibility for their businesses and their international development. They are impacted by political decision of government that change the game of the rules in the attempt to attract economic activities, investments to their country, and to take decision in reaction to another measure that another member state have taken. So such uncoordinated competition seems not to be satisfactory for companies and create great tax uncertainty for them, which has a cost. I would like to say that this scenario remains quite unlikely, given the strong will of self-governments to go ahead on this issue, given the work of the OECD and the work and the concern of the OECD and the European Commission, as we heard this morning before during the viewpoints. But we have to be cautious. The second scenario would be a partial harmonization, which means that we could reach an agreement only on CCTB without the consolidation. I know, as Gaëtan mentioned before, that it is not the aim of the European Commission to to stop at this stage, but we have to take this option into account in the future of what could happen for tomorrow. So the CCTB, is it a way to push without the C of the consolidation? Can it be a permanent solution for companies? I will let Sune, Bertelsen and Alfred de Lassence respond to that question, even if I can guess their answer. But I would like to underline the point because given the pragmatic approach of some member states to focus on CCTB file without the consolidation. So the context can be different. So what could be the impact on tax competition? The tax competition, of course, remains on tax rate because we do not touch on tax rate, as the Commission underlined it each time. But what could be an intermediate solution? Can we imagine a sort of CIT rate corridor? I know it is not in the priority of the European Commission, but at least we could imagine that, similar to what exists in VAT, for example. I know that the European Parliament, in its previous draft report, mentioned it and mentioned the minimal rate of like 15%, sort of things. I just want to underline a previous study of 2004, commissioned by the European Commission itself. And this study underlines that the best tax policy would be a double harmonization on tax base and on tax rate. And by double harmonization, distortion caused by corporate tax consideration would significantly reduce. So it's just to think about it as an option for the future. The third scenario would be the European Holy Grail, I would like to say. So an agreement on CCCTB with the consolidation. The impact would be different whether it would be adopted by all the member states, with the constraint of the rule of the unanimity, of course, or via enhanced cooperation. If it is adopted via enhanced cooperation, which seems to be more likely, we just have to think that the location of groups' operations might be different from the location of member states having implemented the CCCTB. And take a case of a group who deal in 4 different member states. 2 member states have implemented CCCTB and the 2 others not. It means that for that group, you would have to deal with 3 different tax systems, 2 different nationals and CCCTB. So how could the company have to deal with that? And another point that I would like to underline is that the Commission, I think, does not clearly indicate the period between the adoption of the CCTB file and the CCCTB. So it could create great uncertainty for companies if they cannot anticipate the next step and in what delay. The European Parliament, in its report adopted in March with a large majority, mentioned the need to link the 2 phases. But I think it is important to underline it again today. The 4th scenario and the last, but we can imagine other scenarios, of course, would be tax conversions, a sort of intermediate path that is already happened today. A little bit. The idea is to converge national tax system towards prevailing standards in Europe. We have many forces already at work with the works of ECD, the relays on this recommendation at the European level, the impact of decision of the Court of Justice of the European Union undermining national tax schemes. So we have already forces that push in that way. I don't say that this is the best scenario, but it could be one of the most likely one. So, well, this is the different option open to be debated today.
Thank you, Delphine, for setting the stage. Turning up now to Alfred, what are your expectations from a business perspective? Do you think that SIM legislation can pursue several objectives, namely simplification and fight against tax avoidance. The floor is yours.
As an industrial company, we are worried about this double objective. You know, in life there is it's very rare to succeed in double objective. So either you simplify or you fight against over-optimization, because optimization is not always a bad term. But having the both is difficult. And we are worried because we have seen that sometimes in some of the last few years measures in the world. One thing clearly also very worried is a double CTB. The double CTB for us will not lead to simplification. Why? Because simply first we will have to change, make major changes in our computer systems. Probably for us, I didn't calculate exactly, but we have over 250 legal entities in Europe, in the European Union. So, you know, there is a lot of work to change the computer system. Then train the people as well, because training, it takes a lot of time. Plus keep resources, because if you change from one system to another, and then you are audited a few years later, you have to answer to those audits and be able to answer. Therefore, we'll have to keep the resources as well. So all of that will be a major, huge investment. If it's only the double CTB, then we will continue to have transfer pricing fights within the EU. And we may have different point of view on the accounting referential. This is very important as well. And Patrick will talk about it, but to me anyway, there is nothing really clear about the accounting system. You know, are you going to use the same one for everybody or not? And I don't know, is it going to be IFRS, which is already used by the companies which are above the $750 million threshold? So this is important questions, and you know, I mean, if we have a double CTB, will we have 27 accounting systems? Because you know, even on VAT, we still have differences today. I mean, in the understanding, there are major rules which are okay, but there are a lot of other things. And when your businesses become a little complex, you are facing different attitudes from different tax authorities. Therefore, why not on the accounting systems? And so double CTB is quite frightening, in fact. Triple CTB, clearly, that will be a major progress, you know, I feel, and for us. The only question I have on triple CTB is, what about local taxes? I know I come from a country which is a highly international expert in small taxes, you know, and other taxes, local taxes. So what will happen on all those other taxes? You know, will we continue to file, will we have to do the same accounting rules as before, and then, you know, file the corporate income tax with the new rules, so we'll have the double systems, you know. These are questions which are not addressed today, and especially for French companies, I admit, it's quite worrying if we have to continue in two systems, you know. We want to have one system, and local taxes, and you know, all these indirect taxes, etc., are a real problem. A second point, which is totally different, which is more political, is in the current proposal of directive for the double CTB and triple CTB, there is not much about innovation. And innovation is not only, you know, this super deduction. Super deduction, I mean, you know, what about effectively, there is something on the tax credit, you know, R&D tax credit, which is, for example, in France, very efficient, which is not only a tax credit, it's a reduction of your social charges, nothing to do with tax, corporate income tax, but it's, you know, what will happen to this? So that's a question. And as well, there is nothing about the, on the other side of the innovation side, which is income, you know, what is usually called patent box. Will there be something about, you know, helping the supporting the innovation and the income from innovation within the European Union, especially, and I'm looking on West with the United States. And I always say about the United States, it's not a country like France or Germany, it's a continent. It's the EU, basically. So the US continent has now a huge patent box, which is not exactly following the nexus, the OECD nexus approach, but there is a kind of nexus, but it's called the FDII, or 4D, they say the Americans. It's a huge patent box. We cannot ignore it, because of this continent, friendly continent on the other side of the Atlantic. And therefore, the CCCTB should think much more in depth about all this taxation of innovation. Not only the tax, on R&D side, but the other side, the income. So those are for me the major issues or the major questions, let's say. And I think it needs longer time to think about them and develop and discuss about them. A final point is, I admit it's a personal question. I heard many people saying that this will probably help in this digital, the taxation of the digital economy. I'm not so sure. I don't know why, if you have a transfer pricing between Ireland and the US, because you have the CCCTB, it will change the transfer pricing between Ireland and the US. It will be a transfer pricing between the EU and the US, but it will still be the same question. And I don't know why, if the profits move to the US, suddenly, because of the CCCTB, it will move within the European Union. I admit, I probably didn't spend enough time about thinking about the consequence, but to be honest, I don't see why it should change anything about the current system. Because anyway, it's not because the EU will move to CCCTB that the rest of the world will have the same, understanding of the rules. And finally, so all the transfer pricing effectively will remain. I mean, EU should a little spend attention to the consequences on the mentality of some other countries which are very big in size, just name China and India. They want to tax the European multinationals in particular, but the US has one probably as well, but it's always more difficult to tax the US one because they are supported by a government. They want to tax the European multinational, taking into account market shares. So the value and will the CCTB start to spread this show that Europe is agreeing on this way of taxing French European multinational, and therefore Europe may lose some income. At the end, if we are not double taxed, it's fine. But this is an area of the mentality and the approach of the tax authorities may change in other countries, and we cannot avoid this type of question. It's not just the rules; it's the mentality, and then applying the mentality and changing things step by step. Because I'm not I'm a practitioner. I'm not a guy of the tax theory. I don't like the tax theory, that much. I'm practicing, and in the practice, we see issues which, are not in the rules, and that's typical a question which should be as well thought about it. What is the influence in the rest of the world of moving to such systems?
Thank you very much. Coming up to Sune, who will share with us the perspective from the Danish industry, but also let us know more about the diversity of perspectives of EU businesses, since you sit at Business Europe. Are you also concerned about getting stuck at the 2CTB stage, meaning reaching potentially a common base, but getting stuck and never reaching consolidation?
Yes, very much. But I would like to start one step further. Before I came to the Confederation of Danish Industry, I worked in the Danish tax administration for almost 10 years. And normally I regard myself as quite mentally flexible, being able to kind of understand what other people think and why they think it. But I have to admit, I was very surprised how different the world looks from the other side of the table. And I have to say, this proposal to me very much kind of resembles or represent that it's thought from the other side of the table from a tax administration perspective. And for that reason, of course, I very much appreciate this dialogue and the good dialogue we generally have with the EU Commission and everybody else engaged in this process. But from a business perspective, and as you mentioned, I'm in a business federation, so it's a bit more high level than the people sitting in companies and kind of thinking about getting the everyday work to function. We very much have this focus about business becoming more and more international. And when you're talking to tax people, it almost sounds like it's tax-driven, but of course it's not. It's kind of driven by business, and when you speak to business, tax rules are not promoting this. Tax rules are hindering kind of international business. And maybe also coming from a small country, I think the present discussion very much kind of illustrates this saying about bad cases make bad case law. Everybody kind of focus very much on a very few kind of spectacular cases where we want to kind of stop that kind of cases to repeat themselves. And that kind of means the focus is so very much on stopping these kind of complex structures and not so much on making kind of growth-oriented kind of regulation in EU. From a Danish perspective, I haven't kind of found the EU numbers, but Denmark is a very small country with 5 million inhabitants, and Danish business is using about 2 billion euros only kind of for administrative compliance with kind of accounting and tax compliance. To me, that's really way too much spent on kind of just compliance. The Danish accountants and lawyers, they're members with us as well, so I understand there can be different interest in that aspect, but from an industry business perspective, it seems insane to use 2 billion euro just for Danish business to comply with the tax regulation. And it seems like all countries say they want to create simpler rules. We just met recently with the UK Office of Tax Simplification, and we are trying to have the same dialogue in Denmark, and I know you have it in France as well. But it seems in practice, tax law is just becoming more and more and more complex. And of course, American tax reform illustrates it's not necessarily becoming much easier even when you want to. And ironically, that means it's only the biggest multinationals that can really kind of manage in this environment. All the smaller businesses, to them, it's just so extremely difficult to grow and operate internationally, even within the EU. And with this kind of long beginning, I will answer your question, because for these reasons, in the Danish business organization, we actually kind of see potential in the true CTB, in CCCTB, only with common rules. Maybe we say we don't support kind of the actual proposals, but we see potential. If we get the right rules and they are the same in all EU countries, and of course we want them to be kind of applied in the same way in all EU countries, then kind of from a small country perspective with a very export-oriented business, we really see some potential in this. But there should be no doubt that we would strongly prefer a CCCTB, a consolidated model, because there's so much more in that to business, and I would argue to the countries as well. When we wrote our position paper, we kind of said in that regard we very much agree with the EU Commission's kind of visions behind this proposal, kind of a stronger internal market, promoting growth, promoting kind of business within the EU. And in our business federation, whenever we get the chance to say something positive about EU, we really do it. Because in Denmark, as in many other countries, the kind of general approach or the general kind of view on EU is rather critical. But from a business perspective, EU, if it acts in the right way, can be so very important to business. And from a Danish perspective, even a Danish business perspective, the thing about we are getting more transparency with 2CTB or CCTB, if you get the same rules. Probably many of you know this PwC kind of survey or modeling of effective tax rates. And it is just so illustrating that we have the headline tax rate and then you have the effective tax rate. And it's just kind of going in all directions. Ironically, Ireland is the only country where kind of the headline rate is the same as the effective tax rate. In the PwC survey, I don't know if it's to tease France, but France, of course, is number one, where there's the biggest difference between the headline rate and the effective tax rate. And that is kind of also a bit interesting in this discussion we have at the moment with focus on kind of tax dodging or tax planning. And then just, we should remember, EU has already done a lot to strengthen the tax administration and even the material rules through the ATAD directive. So it's like to prevent tax planning, I would argue we already have done the work. So as I see it, we really have the chance when we do the CCTB and the CCCTB to go the step further and making the great tax system for Europe that will ensure that Europe is competitive. And not just competitive to be competitive, but of course because we want to have more growth, we want to have more jobs, we want to have more investment, and a modern effective tax system could encourage that. And remember, we started talking about the American tax reform. At least for the first 5 years, the effective tax rate in the US is about 9% in average. So we have to have a EU system where we can compete with an effective tax rate of 9%. What we hear from the Bloomberg reporting is this about when the countries are talking about this proposal. It's the ACE deduction that goes from the proposal. It's R&D incentives that go, and it's use of losses in other countries. It's all the stuff that the EU Commission put in the proposal from the beginning to make this also attractive for business, and I would argue attractive kind of to promote a healthy business environment in the EU. And then just to wrap up this part of this, as you mentioned, I'm a member of the Business Europe Tax Policy Group as well. The discussions there where we are all the countries member federation and business as well is quite a bit more nuanced than what I've said. There's really very different views on this, and I think as you also illustrated, if you're sitting in a large multinational, it's just looking very much different than if you're kind of representing business more broadly and also kind of a lot of smaller businesses. And I would argue this CCCTB and CCTB could actually be the most important to smaller and medium-sized businesses. So maybe we should have them a bit more in the kind of focus on them when we're designing the system, and just make kind of the world's best tax system also for the small and medium-sized companies.
Thank you very much, Sune. So we're talking about common corporate taxation in Europe, but can we achieve that if we don't have a European common accounting system? Haven't we missed a point here? A crucial point, since accounting is the basis for taxation. And if so, how should we go about that? Alfred?
Okay, thank you. Two caveats to start with. The first one, I'm not a tax expert. I'm just an accounting standard setter who previously was in an accountancy and in business. So please bear in mind that my views might be a little prejudiced. The second caveat is that I am an idealistic and optimistic person, which maybe brings to a distinction between medium term, long term, and short term. You know, we have to have some sort of a vision, but we also need to be realistic about the situation we start from. That being said, to start to open the debate on your question, I would like to make three points. Point one, what is the purpose of accounting standard setting? Because at the end of the day, yes, a relationship might be desirable if accounting standard setting is pursuing the right goals. So for me, accounting standard setting is designed to help reflect transactions, and as a consequence, assets and liabilities. So the ultimate goal of standard setting, if I oversimplify, is to clarify what the profit of a period is, and the consequences in a static environment are assets and liabilities. I insist also on a point because this is something which is forgotten in many instances. This is true, first of all, for the management of the company, for management purposes. You cannot manage a company if you are not reflecting the transactions properly. If you do not have the standards that are reflecting your transactions, you will discard the accounting systems and have your own management systems, which at the end of the day, I think is a situation which is not positive for business, not positive for management. In addition, you need to reconcile, and that's the other goal of the accounting standard system, is to provide financial information to third parties, in particular to financial markets. Therefore, for me, it's absolutely key to have a full continuity between management, accounting systems, management systems, and financial information provided to third parties. A couple of last comments on this topic, which is the purpose of accounting standard setting. We have a concept which we call true and fair view. In other words, we are supposed to work in accordance with a general goal, which is to reflect truly and fairly the business. And the other final comment which I wanted to make is that we have a due process which has been established over many years. It's not a 100% guarantee, but there is a lots of checks and balances in the way we try to determine standards, with a balance between the legal form of transactions and sometimes a concept which is prevailing in cases where we see a difference between the legal form and the substance of the transaction. Under certain circumstances, we may say we put the emphasis on substance over form. But in the rare cases, I'm not very fond of this concept because it's dangerous, because you can lead to something which is different from what has been decided by democratic institutions, which is determining the legal format. Therefore, I'm careful. So, point two, as a consequence, if, again, I mentioned that I'm idealistic. So if my definition of the purpose of accounting standard setting is the right one, it seems reasonable to consider the profit derived from the accounting systems as a reasonable basis for taxation, because it's appropriate technically and it's supposed to be fair. Any disruption, unless the accounting standard setter is not doing his job properly, any disruption has to be carefully considered. If I deviate from the profit, the accounting profit, I have to have, for taxation purposes, it needs to be justified. It needs to be justified, and personally, between rates and incentives via special deductions, or on the contrary, a lack of deductions is something which in general, I don't think is a very good idea in general. Now, there are exceptions. So, I think the single track, quote unquote, which in French we call the moniste system, is basically a rather good idea. It simplifies, it is more appropriate in terms of economic transactions, it establishes a fair basis, a platform for discussion without having too many forums for discussions. Therefore, I think it is the solution. By the way, I would like to mention that since the world is not perfect, the accountants and the accounting standard setters have invented one concept, which is called deferred taxation. So when it's impossible to reconcile accounting standards and taxation standards, you would take that into account in your books at consolidation level, but sometimes also at company level, via a deferred taxation, which is either an asset or a liability, depending on the difference that you try to reconcile. One key word: the strategy of the authority which I chair is to try to minimize, well, first of all, to improve the accounting rules in order to avoid the taxation system to develop rules because the accounting system is not clear enough, which is a key point. And the other point is try to work with the tax authorities. Grégory Abat will be here this afternoon to minimize the differences. In France, we have identified 180 differences. Some of them are small, some of them are big. We need to revisit, and it's for the political authorities to decide if they want to maintain or if they want to eliminate. I am in favor of proposing the elimination of as many differences as possible. Third point which I would like to make is, at EU level, where are we in terms of accounting convergence? Because we complexify a little bit the issue. Can we converge taxation and accounting? Maybe, yes, it's a goal. But can we converge between the various accounting systems applicable in the EU? Because we do not have at this stage a unified system. So we have two key texts in Europe from an accounting standpoint. We have the Accounting Directive, which goes back a long time and which has been revised in 2013. This directive is transposed into EU law. There are a number of options, which is not absolutely ideal when you want to harmonize and unify, because one country is going to take this option, the other country is going to take the other option, and the directives have been negotiated from sometimes in order to precisely not change. So the options reflect the different ways the countries, the member states have operated in the past. Okay, nevertheless, it's too criticized. This is a very interesting starting point, in my view. We should not ignore it. We can improve, build from it. This is a personal feeling, being idealistic, as I said again. The second text, which is important, is the IS regulation. IS regulation has made a tremendous decision, or rather important decision in 2002, because the EU was unable to have one common language for listed companies, if I oversimplify. So we decided, we Europeans, we decided to delegate our sovereignty in this field to the IFRS Foundation, the ISB. And therefore, in 2005, there was an assessment, 5 years after the implementation of IS Regulation 2002. And of course, the benefits of a common language are very significant. Can we imagine a financial market without a common language? However, we need to bear in mind that today, IFRS are produced elsewhere by an independent organization and have to be endorsed, which is a big debate in the union following a due process, which is complex. So, what are the challenges? The challenges is not only accounting convergence. You know, I'm not pessimistic by nature, but also in this field, I think we are working hard. We try to eliminate hurdles or barriers, but there are still hurdles and barriers, we know. And is it possible, if it is considered desirable, to converge between accounting and tax base? I think it's possible, medium term. It requires a lot of energy and a lot of political decisions. I wouldn't personally consider, you have two debates. You need to choose between possibly the IFRS reference, you mentioned it, Alfred. I'm very careful about that because one, it's delegated sovereignty, so we have to be careful. Two, it's not global, the US are outside. So it would, and you know, and three, it's principles based. So, you know, principles, it's nice, but it's not compatible with textbooks. And in practice, the countries that have decided to use IFRS as a tax basis, they are not so happy, it's not easy. There are discrepancies, sometimes there are evolutions that they do not control, it's a problem. And we have also to solve the challenge of local versus local, i.e. in the EU, for me local versus local is French versus Danish, German versus Spanish, etc., where we should eliminate the options. So I think it paves the way for the discussion maybe this afternoon from the political standpoint. Do we start by eliminating differences, key differences in the accounting? First of all, do we take the decision to have a linkage between accounting systems and taxation systems? My personal answer is it is desirable. It's complex, but desirable. Two, are we able to improve without delegating our sovereignty and without implying for non-listed companies the rules of listed companies, which for me is a key challenge. Sorry, I've been too long.
Thank you very much, Patrick. Moving on now to our second round, focused on challenges of implementation. Sune, you emphasized the need for one single set of rules for the 27. And although it's always difficult to anticipate the impacts of a legislation, what challenges do you anticipate for EU businesses, including in a changing international context?
That's a very good question, and it's very difficult to answer, especially because it's like a moving target. We don't really know what will come. So I'm afraid it will be a bit more high level than detailed. I don't know if you might come back to a few more details. I think what you can say, and that's no surprise, is that what business like the least is uncertainty. Especially if we ask all the kind of tax directors out of business, they kind of hate it even more. Of course, people want to know which rules apply. And when we're in this stage where we're beginning to discuss new legislation and we might get to adopting 2CTB, there's a lot of uncertainty about what will happen. And once again, I have to say, usually when I'm speaking to people about CCCTB, the first question is, do you think it will ever happen? With a kind of way of saying it that indicating it will probably never happen. And it seems like the older people are, the more they think it will never happen. I'm a bit kind of optimistic inclined. I see so many good reasons why we should have it. I see a lot of reasons why kind of special interests, including in the countries and in business, don't want it. But I think from a business perspective, what we should focus on is reducing uncertainty. And that brings me back a bit to the question you raised about 2 CTB or 3 CTB. This process where there's 2 proposals and the member state should first decide on 2 CTB and then at some stage 3 CTB, there should be no doubt that business really don't like that. Business Europe has made it very clear that Business Europe only supports 3 CTB or kind of see potential in 3 CTB. And as I said before, we clearly also from a Danish perspective prefer 3 CTB. I would argue it's very much in the interest of the member states as well to kind of get clarity. Should we have 2 CTB or should we have 3 CTB if we should have anything at all? And I would argue corporate income tax means less to the states than it means to business. I think in rough general terms, it's about 3% of GDP in most EU countries. Member states ought really to be able to make an agreement on this. I think the first rough estimates based on the allocation formula in the EU Commission's proposal would mean that Denmark loses 20% of the corporate income tax revenue. Then you might ask me, wouldn't that be great? That would mean that Danish business pays 20% less taxes. But we are pretty sure, like business in other countries, that if the corporate income tax payment to Denmark and the country you operate in is reduced due to the allocation formula, the state will probably find another way to raise the same tax revenue, possibly from business. So the end result from business would be we would pay more taxes. So in that respect, business interests are very much aligned with the country's interests in kind of finding a balance so the total tax will not increase. So I would argue, why not kind of when the countries now want to decide whether to do 2 CCP, decide at the same time whether we do 3 CCP, and then just if it's necessary, kind of make the date of entering into force in 3 or 5 or 10 years' time, but just reach the certainty whether we'll have it or not. And I really honestly don't see any good reasons why the countries can't decide now, unless it's because they just don't. They will probably argue they can't really, they need more time to negotiate, but we all know that if you have more time to negotiate, you use more time to negotiate. Whereas if you said, no, we just have to make the decision and we find the right time without too many kind of election in European countries, we should really kind of make a political agreement. And I'd like to raise the question, what is the alternative? If the countries don't agree on 2 or 3 CTB, preferably 3 CTB, what is the alternative? I would argue it's a continuing race to the bottom. And maybe from a business perspective, that's not too bad. But I would guess it could give some incentives to the member states to kind of get their act together and trying to agree on something better. And again, as we see with the digital tax proposal, if there's not a well-functioning kind of tax system, the individual member states start to enact their own rules. And from a business perspective, that is really not preferable. And I would argue again, in a larger perspective to the countries, that is not really the best way to go. So of course, in that regard, we very much kind of prefer the OECD approach when we're speaking digital taxation, because it's so very important to have common rule wherever possible. And then kind of, I'll just finally kind of, I thought about what can I say else about implementation from a business perspective. Even if we got implemented or adopted all these proposals, there would still be an enormous amount of uncertainty for a number of years. And how do we kind of reduce that? I guess the way most people just would say, well, we have to wait and see what the EU court will say. That might be kind of the kind of traditional way to do it. I would suggest that we considered if it was possible to kind of give kind of tax rulings on an EU level, or at least binding on EU level regarding these new rules. I think that would be necessary and very useful. I'm not sure if it had already been considered. It's like, at least if you make the threshold that is on the table at the moment, the number of companies or groups that is actually kind of part of triple CCB is so few that you couldn't kind of gather them together, and then you could sit around a very, very big table and kind of agree on a lot of stuff, a lot of interpretation. I think kind of to sum it up, business really wants all the clarity we can get. No big surprise there.
Thank you. Alfred, do you share these perspectives? What are your main concerns regarding implementation?
I will be a little shorter probably, but what was just said is, I think, it's extremely important, in fact, because it's are the various governments going to take decisions quickly or not? It depends from the objective. And the objective is still, is it simplification? Is there a tax strategy as well? Because tax is a tool, and I mentioned it before about, what about innovation, for example? It's a tool to encourage or discourage some activities. What do we want? And then, or is the objective about fighting the so-called over-optimization? And until the goals are not very well defined, we will live up to what you said just now. In fact, uncertainty. I mean, are you going to have governments who are going to take decisions, or are they just going to say we think about it? Because we don't know. In fact, I'm not sure we know the goals, and so therefore, at the end, will it happen or not? I don't know. Are we? You probably, if all European countries agree on an objective, which is, we want to have one simplification, we want to have one tax strategy, we want to, in the tax strategy, this is a goal, like some countries did a few years ago. I remember, for example, when I was a student about Japan, Japan and the famous MITI. You may remember this minister, which had, there was real objectives, and they developed that in the 50s, and it was successful, a long time later. Not not in 3 years, but in 20 years. Do we have those goals or not? I'm not seeing it. Therefore, if it's just fighting optimization, it will be totally different. And then, effectively, what will government happen? Will they agree to lose? Will some governments agree to lose revenue, and some? I mean, of course, they will accept to gain revenue. That's. I think until those goals are not clear, uncertainty will remain about the triple CTB and the double CTB.
Yeah, thank you very much. Now, Delphine, of course, the difference between the Commission's 2011 and 2016 proposal is namely that the latter, 2016, would lay down mandatory rules for groups above a certain threshold. The famous 750 million euros revenues worldwide, and would be optional for the others. The Commission sees that as a way to fight tax avoidance, whereas the Parliament consider it should cater to the SMEs as well. What is your analysis of this question of the threshold and potential distortions between the players?
Thank you, Anne. I think this is the question of the threshold is a good illustration of what you said just before. Because with this threshold, we just wonder about the spirit of the CCCTB project. Is it to give and offer a level playing field for every companies, or just to target big multinationals that are, according to Commission, more likely to engage in tax schemes. So I think the threshold that with the new proposal to make mandatory for big company with this level of turnover is at the heart of the spirit of the new version of the project. What does correspond to the threshold? This threshold does not correspond to existing group tax treatment within the Europe. Well, I don't think so. Nor to the accounting directive of June 2013. At least it is aligned with the country-by-country report, but I think it was not fixed in regard with that, but by chance it is aligned. There is a debate on the level of this threshold and its existence. For some organizations, the CCCTB should remain optional for everyone, as it was in the previous, the first proposal of the 2011. For some others, it should become mandatory for everyone, as the European Parliament proposed to reduce gradually the level of this threshold to reach within a maximal period of 7 years the level of 0, so to capture every company. We have a question about at what pace and how this gradual reduction could be realized. But in the idea of the Commission, I think that the SMEs are less likely to have some cross-border activities. Well, that's one of their arguments. But maybe for intermediate-sized companies, the reality are a bit different. And I would like just to give you some example, some French examples, sorry to be so French, but some various effects of this threshold that we have noticed in France. And the first one is that for this threshold could create like a sort of artificial boundary in relation to the economic realities, and the size of a company measured only with its turnover threshold does not necessarily reflect the reality of its organization, of the way it is organized, and an intermediate-sized company can have the same level of complexity of a big multinational operating with a lot of subsidiaries and plants in many different member states. And I met several mid-cap companies in that situation. So I don't really understand this boundary. And another effect is about that it could create discrimination between big multinational and smaller groups, as the smaller groups have to decide whether it's interesting or not to opt into, to assess the consequence of their choice. That implies costs, to resources, times, and well, just to decide what option that they could take. And if it has to remain optional, in the version of the proposal, they have to engage for a period, a minimal period of 5 years, which I think does not really offer a lot of flexibility for companies who have to cope with some restructuring operation or new strategic directions. Maybe I know that the European Parliament wanted to delay this period. Maybe we could think about a shorter period of 2 or 3 years to be more reactive and adapted to the economic realities. Another effect is about the distortion that could be created between actors of the same activity sectors. And I will give you a French example. In large scale distribution, we have on one side some big groups with centralized organization with subsidiaries, which would fall into the scope rapidly. And on the other side, some groups with decentralized organization with franchisé, independent establishment, which would be outside of the scope. So some new disputes could be raised with the question of this dual optional versus mandatory system. Is it compatible with the French constitutional principle of equality before taxes and public charges? That is the question. And also some question regarding a problematic of growth. Some companies may decide not to grow too much just to remain under the threshold. Well, that's a lot of questions that we could have if it could happen in that scenario. But again, with this threshold, how to ensure the level playing field? Well.
Thank you, Delphine. Before opening up the ground for questions and answers, Patrick will provide a nice transition to our next roundtable that we will have this afternoon on taxation at the digital era. What are the challenges of accounting at the digital era, especially in terms of the value created and how to capture it?
Mm-hmm. To offer a comment from an accounting perspective on double or triple C, I just wanted to mention, and I forgot, that from an accounting perspective, the only real management system and the only real, or the prevailing management system and the prevailing reporting system is at consolidation level. So I'm not saying that this should be duplicated for tax in the area of taxes. I'm just saying that if we want to converge, the emphasis of financial information and management information is at consolidated level. So that being said, I go back to your question. In fact, we have to ask ourselves 3 questions to progress. Normally, as accounting standard setter, we ask ourselves 2 questions, but in the case of taxation, we have to add 1. From an accounting standpoint, we call recognition, and we have recognition and measurement. Recognition is when should I recognize a transaction? And measurement is how do I record it, quote unquote, how much? And from a taxation perspective, but also as a consequence from an accounting perspective, you need to add a third dimension, which is what I could call localization. Of course, where? So, when, how much, and where? And in the digital economy, we organize at ANC level, we organize an annual symposium at the end of December, no, beginning of December, so you're all welcome. Last year it was on digitalization and accounting, so that's in. This year, just a little ad, if I may, it's on non-financial information and financial information, which is also touching some of the areas we're addressing today. So the conclusion was that roughly we are lagging behind at accounting standard setting in terms of recognition and measurement, and of course we are not addressing localization. Standard setting is a long-term system. I have a 6-year mandate, I am mid-term, and frankly, I am always surprised because I'm finishing projects which started a long time ago, and I'm launching projects I will never see the end of. So I think, coming from a business environment, I feel a little impatient, and I say, yeah, gosh, can we go a little quicker? But due process is always the motto. So, but I think that today, we have to rush because reality is moving very fast. And lagging behind is not a solution. So we have launched, for instance, a group on crypto assets and blockchain, because this is something that the literature on crypto assets is, there is a literature, but from an accounting standpoint, very minimal. I also ask myself, and I will finish because you asked me to make the transition, so I'm not going to have the debate. But as an example, I'm very surprised by something. When I receive, as a user, when I receive a service for free, in exchange of my personal data, today, no recognition, no measurement, no transaction. Is that true? I am selling my personal data against a free service. So my data is acquired against the provision of a service for free. No VAT, no asset, no amortization, nothing. So, being a simple man trying to use my common sense, I say, is it reasonable? So you may ask the question this afternoon.
Yeah, right. Right, I will now open the floor to questions. So please raise your hand and someone will come up. Tack. There's one right here. I'd like to take 2 or 3 in a round.
Is it working? Yes, it does. My name is Olivier Martier. I work at Sciences Po, and I'm very interested on the fiscal harmonization or convergence measures for SMEs, growing SMEs and mid-caps. I understand from the panel that CCCTB may be very positive for SMEs and mid-caps. Can you confirm this? And do you have any ideas on new initiatives, pan-European ones, that could be useful for those companies? Thinking out of the box, I mean. Thank you.
Are there other questions at this stage? Yeah, right there at the end.
Hi, I'm Maria Volanen, and I work for the Finnish tech industries, and I actually will be talking in the next panel, so I can maybe answer your questions, hopefully. So I think the question goes to Sune. Are you, because in Finland, the tax administration is really worried about that the CCCTB will only be an extra layer of work, because it's only EU and not a global solution. And also the companies are really worried about this, that it's only a part solution. So is it the same in Denmark, or how do you see this? Thank you.
My name is Christer Andersson. I'm chairman of the tax policy group of Business Europe. One issue when CCCTB was designed was, of course, the allocation formula with 3 components. And one of them is labor. And to make it more likely that countries would accept CCCTB, the labor component was divided into wages and the number of workers. Now the European Parliament have proposed that the formula should be split into 4 components. And data, or the use of data, should be the additional component. Many member states oppose that 1/3 of the tax revenue should go to sales. But now, with the inclusion of data, basically half would be allocated according to sales. And I think that could make it much harder to get smaller countries to agree on CCCTB. And I wonder how you view the development, making this adoption to the digital world. Is that the right way forward, to have a formula where basically half would be allocated to big countries in particular?
Thank you. We are already delving into the issues of our next panel, but this makes the debate more lively. Alfred, you want to start?
On the first one as well, which I don't know, because allocation, to be honest, it will be a little blank, my answer, you know. I haven't thought really deeply about this subject, you know, what about allocation, you know, will small countries disagree about size? Probably. Do we have, I mean, the question is, do we have figures? Does the European Commission at this stage have figures about what the consequences will be on the implementation of the triple CTB, you know? And do they know how will... there is somebody from the European Commission.
Yeah,
so, you know, this is... At the end, it's you know, I mean, us Air Liquide, for example, you know, will I pay more? I haven't calculated yet. Will I pay more taxes in this country or in that country? I don't know. To be honest, we haven't done any calculation at this stage. We are thinking about doing it. So using simply the CBCR, we just reported at the end of December for the year 2016. And we may look at it in order to do some rough estimates and what are the impacts, you know, on the various allocation keys using the CBCR numbers. You know, it may be the way without using, you know, tons of time of people to do those kind of estimates. But, you know, effectively, some small countries with factories may want to have more of revenue, you know. I mean, as well, you know, what about social charges? Should countries take into account social charges? Because if they get not enough social charges, they may want to have more tax and vice versa, you know, depending, you know, there are a lot. I think there are too many questions at this stage. And to be honest, as a company, we haven't thought about that in detail at this stage, you know, and I rely on the European Commission who made a proposal to have some kind of impact, analysis of impacts.
Gaëtan, would you like to jump in this debate? Great.
Just to say that, as it is the case for any proposal of the Commission, it is accompanied by the impact assessment, which is public. There's been also a public consultation, actually. In this impact assessment, we've done many simulations with a general equilibrium model that is actually something that we've developed, which is state-of-the-art. We haven't done any simulations per company, obviously, but it would be great, actually, if multinationals would actually start looking at the impact of the CCTB and the CCCTB and basically publish those results. That would be very valuable information for the debate.
Well, point taken.
And just to complete, it's only for the data factor, it's only amendment of the European Parliament, so we don't know the future of this introduction of this fourth factor at this stage.
I can just add, and I'll come back to the other questions. As you know, Krista, when we spoke to the European Commission in the tax policy group, and I suppose I can mention this, they kind of said, we need this because the tax system is broken, especially in regard to the digital taxation. We really need to kind of adjust where the taxes are paid. And then a bit later in the discussion, they said it's kind of it's very important that we don't kind of move the place where taxes are paid. Then we'll never get it adopted. And we had this discussion about how do we get these ends to meet, and the Commission said, well, what we are very good at is setting the countries around the table and have the big negotiation where you might include other aspects, at least the way I recall the conversation. So that might be an aspect of kind of bridging the gap, not only from a kind of technical tax perspective, but more a high-level political perspective. And I think the two other questions might be a bit related regarding SMEs and kind of, is this not just extra work? From the beginning, I think a very important concern has been this about it seems like the system is kind of designed with the kind of very largest multinationals in mind. And at the same time, everybody can see it's not really very kind of clever to have two tax systems to kind of administer in the different countries. So there'll probably be a very kind of strong push to go over to one system when it's first kind of, if it ever get adopted. So it's really kind of a challenge that if you design a system kind of to cope with the very biggest multinationals, and you afterwards starting to apply it on SMEs, that will not necessarily get the right kind of rules, especially for the smaller countries. A bit kind of rude expressed, kind of the largest multinationals, they have shown they are very good at adopting kind of to the environment, to the legislation. Of course, they have the resources, whereas the smaller companies don't. And then you asked kind of out of the box, kind of are there any solutions? Personally, I have kind of a strong fascination of the Estonian tax system, which kind of Latvia have adopted this year. This about you don't have kind of tax filings. You just have kind of your accounting, and then when you pay out dividend to the owners, you pay a corporate income tax on the dividend. There's a lot of entrepreneurs kind of establishing themselves in Estonia because, of course, as long as you don't take out dividend, you have more money in the company that you can reinvest and use to develop your business. I think it would be very interesting kind of to examine if that could be kind of used in a wider context. I think in Denmark, and at least in our business federation, we don't really kind of like this about different kind of tax rules depending on the size. But you see a lot of countries that kind of apply different tax rates or different tax kind of rules depending on the size of the company. And I think that kind of also answered the question about if this really is an advantage, if it will make it easier. I think we don't know. It depends on kind of how the rules will be in the end, whether it will be much easier from a business perspective. I think it was very illustrative when you started to say, well, then we have to change all our systems. And that is kind of the reality. It has to be a tax reform like the American kind of a big one that will kind of apply for the next 30 or 40 years and be competitive. And if I still work in a tax administration, I would not want to apply two different tax systems. When I worked in the tax administration, we very seldomly looked at anything else than the Danish tax law. But I think in the current environment, the competition commissioner, my country fellowman Vestager, kind of seem to blame national tax administrations if they don't know the tax rules in the other countries, in the other end of a transaction. So I think it would be useful, especially in the big transaction, for the big multinationals, if the tax administrations knew more about kind of how the rules looked in the other end of the transaction.
Thank you. Are there other questions at this stage? No, so then you'll have a couple more minutes for the buffet lunch that is offered by the Chamber of Commerce and Industry of Paris-Île-de-France. Well, as we have seen, it is really in this panel, from namely business perspectives, it is really fundamental to that tax consolidation remains a key feature, especially since the major tax obstacles within businesses can really be tackled at this level. And this is a challenge because in one of the panels that we will have this afternoon, you will see that member states, namely France and Germany, see it as a very pragmatic approach to move on with the first stage, a common tax base, and envision the second one, consolidation, in a much later stage, since it's hard. So I think we can really warmly thank this very interesting panel, and I will ask you to come back here in this room at 1:45 sharp for the next keynote speaker. Thank you.